A colossal event is unfolding with Shiba Inu, one that the average investor is completely missing. Market giants have just withdrawn 700 billion tokens from trading platforms in a discreet maneuver that signals a monumental change. If you are waiting for a clear sign, you may have already missed the window, as this critical development is set to redefine the entire landscape for all holders. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. As the cryptosphere navigates the latter half of January 2026, the market is characterized by a high degree of caution. While the focus remains on established assets, a profound yet subtle transformation is underway within the meme coin sector. The prevailing market psychology has evolved from purely speculative trading to a more strategic, long-term accumulation strategy favored by large capital. Reports from analysts confirm that the start of 2026 has seen a significant volume of assets migrating away from public exchanges and into secure private storage solutions. Although this trend is visible across the market, the sheer magnitude of this movement in Shiba Inu is unparalleled in recent memory. Despite the hesitant mood on social platforms, the underlying on-chain metrics paint a decidedly optimistic picture. Data from various market intelligence sources shows a continuous reduction in the total supply of Shiba Inu held on exchanges, a trend that began in December 2025. During this period, over 80 trillion tokens were permanently removed from the readily available trading pool. This substantial drop in accessible liquidity is a classic precursor to a supply squeeze, where even a moderate increase in demand can trigger dramatic price increases. The consensus among seasoned traders is that sophisticated capital is establishing positions for a sustained upward trajectory, choosing to disregard the daily volatility. Our analysis of the current situation clearly indicates that the foundations for a major structural price movement are being laid. The market is currently testing the resolve of smaller participants, while institutional players are systematically acquiring tokens. Grasping this context is essential for navigating the current uncertainty, as the figures strongly suggest that the quiet buying activity observed now could soon translate into a powerful market rally. The central piece of news that has galvanized the community is the astonishing removal of 700 billion Shiba Inu tokens from centralized exchanges on 28th January 2026. This action is far more than a routine transfer. It stands as one of the most significant single-day outflows recorded since the beginning of the year. According to figures from on-chain surveillance platforms, this massive withdrawal was executed in several large segments, including one notable transaction where 250 billion tokens were moved out of a major exchange in a single instance. This pattern of behavior is typically characteristic of institutional investors or wealthy individuals who opt to secure their holdings in private cold wallets, thereby removing them from the immediate reach of trading venues. The timing of this withdrawal is particularly telling. It occurs precisely as the price has been consolidating within a narrow band, strongly suggesting that these major holders are not preparing to sell, but rather committing to long-term holding. When 700 billion tokens are taken off the market sell side, it creates a void that can rapidly amplify upward price momentum once buying pressure resumes. Experts specializing in tracking large-scale movements emphasize that an outflow of this magnitude is a strong indicator of high conviction in the asset's future prospects. We are observing a distinct pattern where the tradable supply on exchanges is being depleted at an accelerating pace. This event has fundamentally altered the supply-demand dynamics for Shiba Inu, pushing the total reserves on major platforms to their lowest point in months. The ramifications of this are profound, as it drastically reduces immediate selling pressure and compels new buyers to compete for a significantly smaller pool of available tokens. This is the pivotal event that demands attention, as it provides the clearest evidence of a fundamental shift in the market's underlying structure. The concrete data supporting this market shift is clearly visible in the on-chain metrics recorded over the past 2 days. On-chain statistics reveal a 111% spike in transactions valued at $100,000 or more. This surge in high-value activity confirms that the movement of 700 billion tokens is being orchestrated by major financial entities, not by scattered retail trading. Furthermore, the overall exchange reserves for Shiba Inu have experienced a sharp contraction. According to reports, on 25th of January, the reserves were estimated at 82 trillion tokens, but by the morning of 28th January, this figure had dropped substantially following the processing of the 700 billion token withdrawal. Beyond the exchange withdrawals, large-scale accumulation by whales has reached a monthly peak. Separate reports indicate that transactions totaling 361 billion tokens were transferred into wallets controlled by major holders earlier this week. These figures are striking when compared to the current daily trading volume. While the daily turnover remains around $1.5 billion across all venues, the fact that such a large portion of the supply is being locked away is a crucial indicator for those focused on long-term value. Technical analysts also highlight a tightening price pattern, with Shiba Inu currently trading near 780 units. This price point is being aggressively defended by buyers, with on-chain data showing substantial buy support appearing whenever the price approaches the 740 unit level. The concentration of tokens among the largest holders has increased by 3% in the last 14 days alone, further diminishing the readily available supply. These metrics collectively present an unambiguous picture of a market that is being systematically stripped of its liquid assets, setting the stage for what many anticipate will be a significant price correction. To properly understand these massive outflows, one must grasp the relationship between exchange liquidity and price volatility. Market experts explain that when 700 billion tokens are removed from exchanges, it fundamentally alters the depth of the order book. With fewer tokens immediately available for sale, the market becomes far more susceptible to upward buying pressure. This phenomenon is widely known as a supply shock. The fact that this is occurring while Shiba Inu is trading at 780 units suggests that the most informed investors view this price as an extremely favorable entry point for sustained accumulation. Rather than capitalizing on short-term gains, these whales are opting to move their assets into cold storage, which is the most powerful signal of long-term bullish conviction possible in the crypto world. Expert commentary suggests that Shiba Inu is evolving from a purely speculative asset into a more established digital currency, attracting serious institutional interest. The 111% rise in large-scale transactions signals a change in the typical buyer profile. We are no longer seeing only small retail transactions. We are observing coordinated actions by entities managing millions of dollars in capital. This institutional engagement is likely fueled by ongoing advancements within the Shiba Inu ecosystem and the expectation of future utility. By removing 700 billion tokens from the public market, these players are essentially placing a substantial wager on a significant price appreciation. Should the trend of shrinking exchange reserves persist, the path of least resistance for the price will almost certainly be upward. The analysis of these movements points to a high level of certainty among the largest holders, who are clearly unconcerned by minor price fluctuations. Their focus is on the long-term outlook, which involves a dramatically reduced circulating supply on public platforms. Examining the short-term forecast for the coming 1 to 4 weeks, the technical and on-chain configuration for Shiba Inu remains exceptionally strong. Given the current accumulation patterns and the dramatic reduction in exchange supply, numerous analysts are forecasting a potential 25% price increase from the current valuation. This projection places the immediate price target in the range of 850 to 900 units. If the momentum generated by the 700 billion token outflow continues to build, we could rapidly see a test of the 1,000 unit psychological barrier before the close of February. The optimistic scenario is heavily supported by the fact that the selling pressure has been significantly mitigated by the recent actions of large holders. However, a balanced perspective is crucial. In a less favorable scenario, should the broader market experience a sudden downturn, Shiba Inu might retrace to its key support level at 700 units. A decisive breach below this point could lead to a temporary decline towards 650 units as late entrants liquidate their positions. Yet, considering the strength of the current buy support and the volume of tokens being moved to cold storage, the potential downside appears limited compared to the potential for growth. The next 48 hours will be vital in determining if the price can successfully breach the immediate resistance at 800 units. If the price maintains its position above 780 units, the likelihood of a major bullish breakout increases dramatically. We are at a critical juncture where the data suggests a significant price action is imminent, but as is always the case, the market can surprise. What is your expectation for the price movement over the next 14 days? Do you believe the 850 unit target is achievable, or are we facing a deeper correction? Share your price targets in the comment section below. The monumental withdrawal of 700 billion tokens has established a new trajectory for Shiba Inu. Regardless of whether this results in an immediate surge or continued consolidation, the market's largest players have clearly made their intentions known. Be sure to follow us for the latest updates as this data continues to evolve. If you found this detailed analysis valuable, please take a moment to subscribe.